Another day, another dividend stock. Thank you for joining me, everyone. Welcome to DS Smith PLC. Ticker symbol SM for mum, D for Delta, and S for sugar. Now, we're going to have a wee look at them here. Who are they? What they do? We'll have a look at their investor page. We'll also have a wee look at them on Simply Wall Street, then Dividend Max, and then Trading 212 to give you as complete an overview and all the good information that you can to have we look into DS Smith. So, without further ado, let's go. Now, in the past 5 years, they've had their ups and they've had their downs. At the moment, they're currently the lowest I think they've been, even throughout the pandemic. They weren't this. Oh no. Okay, they were slightly lower in the 3rd of April in 2020. But right now, they're almost at that. So some people see it as they're, trading at a bit of a discount below their, their fair trade value. Other people think maybe that's a sign of things to come. Even looking at the max chart, from 2009 to 2018, they had a meteoric rise from about 50 pence to £5. Now trading currently at £2.65, so about $3.20, I think, for our friends across the water that might be interested. Let's see what other information we have here. We have dividend yield sits at around 5.64%, in and around there. So without further ado, let's go to their website. Who are DS Smith? Well, they're a large packaging company. I know in the past few days we've actually looked at 3 packaging companies, from Smurfit Kappa to Mondi to now DS Smith, the 3 of them being kind of the largest players in that game. DS Smith specialise in the packaging solutions, obviously all boxes, manner of boxes, paper products for cardboard and other things, and they also specialise in recycling services. I didn't know this. They're actually Europe's largest paper and cardboard recycler, so there's a wee bit of information you mightn't have known of the company. On to the next one. Their company, okay. So, as I said, leading provider of sustainable packaging solutions, paper products, recycling services. Over the last 80 years, they have grown dramatically. As you can see, even in the last decade, it was some massive, massive growth. Now, of course, you can read into everything here. Their circular business model, kind of similar to Smurfit Kappa's, except Smurfit Kappa they own even the tree farms. Now, I don't see anywhere, they don't mention it, that they own like the trees that they harvest, but a lot of DS Smith circles around like recycling and reducing waste, so that seems to be their sort of main offering. Let's see, moving on. Who are we? Redefining packaging for a changing world. I love these websites for these businesses. They really put them in some amazing light. Now, obviously, the services and everything they do, obviously, fully respect, and it is a good way to promote yourself, if anything. But the depth that they go to is quite amazing. Growth in digital shopping is revolution, or in digital technology. Yeah, e-commerce is driving the growth of these packaging businesses quite rapidly. And e-commerce doesn't seem to be like it's slowing down anytime soon. So these companies are obviously, hopefully going to benefit as long as that growth keeps up. Moving on to one of my favourite sections on the investor section. It's the investment case, or sometimes it's a presentation. It goes under a few different names, but it's why invest in this company. So they basically are promoting to you why you should join in. So they are a industry leader, sustainability leader, strong market driver. So as I was mentioning, e-commerce is growing quite rapidly, as is our need for packaging, and then even moving towards sustainability. A lot of these companies have jumped ahead to make sure that their packaging is as recyclable, sustainable as can be, because that is the direction we are moving in. Strong customer base and a proven track record. I think going on down, it will go a wee bit more in depth for us. So they employ 30,000 people in more than 30 countries. They have 300 sites in Europe and North America, expanding quite fast, and a very strong R&D and innovation sector in the business. We are the only major packaging company in Europe offering purely fibre-based solutions, and Europe's largest cardboard and paper recycler. Let's see, they have ambitious targets in plastic replacement, and they keep talking about their circular business model. There is a page on the strategy here, business model, that you can click into, and it sort of details the circular business model. Sometimes I look at the models if they are extremely useful to the video, but in this case, it's not. Smurfit's Kappa's one made a lot of sense, but their one's it's a bit different. But anyway, let's carry on. Let's see, proven solutions to meet market trends accelerated by COVID-19. So yeah, COVID-19 seemed to prove, well, I wouldn't say a good thing to a lot of these companies, but everyone's swapping to e-commerce, increased demand. So for the long run, as long as that demand keeps on increasing, these companies are going to keep on making that dollar. Okay, on to Simply Wall Street. I have no affiliate links or anything for this. I can apply for an affiliate program on this, and I have done, because I find this website extremely useful. So what I'm going to do is I'm actually going to pay for the membership into September and start using it for every video that I can, because to me, I love when something can be put into a really visually handy guide, kind of like a lot of the business models that businesses do and their presentations. And Simply Wall Street is that, but for dividends, and even just looking at the stock overall. So SMDS, as you can see, £4.41 in August, and now we are down at £2.67. They're trading at 44.1% below their estimated fair value, which I'll show you later. It's based on a discounted cash flow and a massive formula list, and it says whether the stock is undervalued or overvalued or a fair price, and it does it for every company. So in the future with my videos, I will be using this a whole lot more. Unstable dividend track record, that is true. Their dividend it was growing quite consistently up to 2018, 2019. It took a dip even pre-pandemic. Over the pandemic, they actually skipped a year of paying dividends, and then into 2021, they've come back a wee bit lower to pre-COVID levels, and predictions are we're not sure. Hopefully, because their earnings are growing year on year, hopefully they will pick it up. So let's see. In valuation, they're green in everything bar future. Future in the next 1 to 3 years isn't fantastic. So we'll scroll down and see why that's the case. This provides everything: price and history, performance, even gives you when dividends were paid, executive board changes, special calls, everything. Gives news. It is a fantastic resource. I'm really, really glad I stumbled across it, and obviously I get to show you how it's used. It is fantastic. I will be continually using this as much as I can. You can do the free plan that I'm currently on. Gives you 5 companies per month to have a look at, and you can look as in depth into the company. And I think you can go back and review any company you clicked on out of the 5. Then I think paid membership you can do 30 a month, which I'm going to do for the next month, so I can do one a day, as I'll be doing a dividend video a day. And then there's like one you can get unlimited, but it's £180 a year, I think. So maybe I won't go into that. I won't indulge in that one just yet. But yeah, pay ratio of 12.8 compared to Mondi sits down at a wee 6.9. JMAT, they say JMAT's in the same as a competitor, but JMAT's kind of more chemicals, so I'm not too sure why they put certain companies up against them. But Mondi is a competitor. I wish I could actually. Can I suggest? I want to suggest SKG. Yeah. Yep, there we go. Okay, let me out. Maybe that might change into the future, might help someone, because SKG, Smurfit Kappa, that's a company I invest in between DS Smith and Mondi. And Smurfit, I ended up picking Smurfit. You can check out that video for my own reasoning on that. But let's go down to one of my favourite charts, this one here. So the share price versus the fair value. At the moment, it's 44.1% undervalued. Now, I would never, obviously, no legal advice is provided in these videos. It's quick overviews. However, don't look at this as the be all and end all, because, a company, if it is extremely undervalued, sometimes there's reasons for that, and this doesn't tell the entire story, so always bear that in mind. Financial health, assets to liabilities in the short term, there's a bit of a shortfall, but long term, they're fine at the moment. And let's see, balance sheet seems pretty good as well. And their dividend. Now, their dividend payment, well, 5.75%. Obviously, there's a tiny bit of difference between websites. It is down. It is down from pre-COVID levels. As I said, you could go through this with a fine-tooth comb, and the amount of information here is mind-boggling. But how do we look at all the cool parts that I wanted to? So we're going to nip on over to one of my favourite websites, Dividend Max. All of these websites come together to kind of paint a picture so you can make a best informed decision about any companies you would ever be looking at investing in. And I provide them all in a pinned comment, so you can use all these websites if you need to. So if you had 100 shares here, we got a payment of £4.80 back in May, or £10.20 in November, and the ex-dividend date is currently the 6th of October. 100 shares would be £262. £262 at current value anyway. So yeah, they were the chart from 2009 to 2017 is exactly the chart that I would look for any company. And then we had a wee bit of a dip, then a wee bit of an increase, and then 2020, nope. 2021 they cut it, and then this year it's back to similar pre-COVID levels. I think it's like 12.8 this year. So yeah, it's an increase, but yeah, it's not consistent. I'd love to know why maybe 2020 was dropped out and things like that, but all things to consider when you look at any company. Okay, going on over to Trading 212, the stock brokerage that I personally use. We can scroll down. Again, it provides a lot of key ratios, a bit of basic information, a bit of a summary on the company as well, useful to have a wee look at. Obviously, different platforms offer different levels of information on a company. Revenue here, net income, they're sitting at a wee 3.87% profit margin. Profits, as you can see, have decreased since 2020. And total assets been on the rise, and total liability seems pretty stable at the moment. I do like their cash flow. Their operating cash flows increased year on year. I love cash flow. It's a great indicator for me personally looking at any business. However, as I was saying, DS Smith was just slightly beat out by Mondi, followed by Smurfit Kappa. So then I picked out Smurfit Kappa in the end for my own portfolio. But definitely, again, it could be an undervalued company. It could be a great opportunity for someone. You never know. Although for me, it would be more of an opportunity for almost capital gains as opposed to dividends. But just because their dividend isn't... When a company completely cuts a dividend out for a year, that raises a bit of a red flag for me. Even over COVID, Smurfit Kappa kept paying. I think even Mondi paid over the pandemic. A lot of the companies in my own portfolio have never really cut their dividend at all, and they've continued to pay. So these are just all questions that you have to ask when you're looking at any company, of course. But yes, thank you for watching as always. I'll have a wee pin comment with all the links to websites and Trading 212 and whatnot. And have a great day, morning, evening, wherever you are. And I'll see you hopefully in another dividend video. Bye-bye.